The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 19th of March. This is the day that I do my, I didn't even get it ready. I should have got that already, because why? It's important in the sense that for subscribers, yes, on the weekends I do at least an hour overview, a video, and I go through all these different aspects, the technical aspects, as well as what we're looking at, our positions that we have, why we've got them, what we like about them, what in fact is working, what's not working. But most importantly, within that context, here we go. I wanted to do a webinar because of the timing in terms of market positioning. I want to do a webinar for new subscribers to display the kind of techniques that we look at, why we look at particular stocks, why you can be long and short at the same long positions and also have short positions at the same time, because markets are often very bifurcated. So this is my opening call. Let me just do that right now. Opening call, subscriber webinar, Tuesday, March 19th at 4 p.m. Eastern Time. It's a 90-minute webinar, the technical tools needed for the coming few months. Of course, there's not just the technical tools. What's the point of the technical tools if we aren't going to be having positions for them? So I'll be discussing the critical 914. This is what I was discussing in the update at 10 o'clock, how the various indices are getting so close. Some have already started to just nick that 14-period moving average for the 9 to come down to go pink. That means that indicator, not the whole thing, but that indicator goes to a sell signal. I want to talk about the Chapman wave methodology of notating the charts, the alphabet A, B, C, D, E, F, G, but it's that fourth highest peak D, where other things can happen, and that in a buy signal to buy mode, you absolutely expect, it doesn't always happen, but most of the time you expect that there should be at least 4 higher peaks, peak A, peak B, peak C, and then D. And at D, other things can happen, but you expect that the buy signal upgrade to buy mode takes you to at least that level. Well, some of the key indices are only at a peak B or even a C. They've still got a way to go. And that's just to say that that's where you kind of put on a cautionary light. That doesn't mean to say that you have to short anything like that. That's the weekly charts. Daily charts are different. We want to decipher the rare flood of round numbers unfolding in this market. I just have never seen so many. What it means, I think we'll only know in about 2 or 3 weeks' time. It's too soon because there's just too many. Once or twice you can see one, for instance, Nike, the sports clothing, where is it? I haven't got it. Okay. Well, Nike has made a round number just the other day and then popped up a little bit, and now it's testing that round number. So all sorts of things happen. Sector rotation is very important. Are we going to see something happen here if the semiconductors, which I believe are now in a sell signal, maybe even going to sell mode very soon, that's on the daily charts, they usually lead the markets up and they lead the markets down. Well, what's going on there? Stock selection and a sneeze, of course, my usual sneeze. And then live questions and answers. So that's all in this webinar at 4 o'clock today, 90 minutes. Let me get out of this here. Just move it away. Whoops, where did it go? There it goes. Okay, so where are we? The Dow's up 69. The S&P is down. In the daily chart, it's only a peak B. In the weekly, you still have to go to a C and then a higher leg D at least before you start to look for some kind of bigger topping action. So the S&P right now is trading down 9. It's not bad. It's in the sideways consolidation, but as it's going sideways, look, the MACD is declining. The daily chart on the left, the unbalanced volume right here is very negative. The stochastic is down at 62%. The relative strength has begun to weaken. And the 9 is still way above the 14. It'll take something really sharp. It'll take, now I'm going to talk about this as well. This is called the Chapman Wave Inside Track Propellant Zone. And you got repelled right there, the Chapman Wave. This is the repellent zone right here at a peak D. And that peak D, so far, is just pulling back. It hasn't given a sell signal or anything like that. So this is still early in the game, and it's still a peak B in the weekly chart because last week was a fractionally lower high, and that doji candle of the 8th of March with a high of 5130.99, missed by a penny, a round number, and the low of 5189.26. Those are the parameters we'll be watching this Friday going into next week. Now let's look at the QQQ. QQQ is still down. It's only down 290 right now. It's come back a little bit from the low. And, look at that. As we're talking, that 9-period moving average, you see that S? Look at it. It's in, it's out. It's in, it's out on these little inflections. Minus 2.83 makes it at 283 or minus 288. 289. Yeah, 295. So 434.553 is the QQQ. That's the quote right now. And there's that S. So the day is young. Anything can happen. I'm suspecting based on the NQ, that's the futures, that we've already started to see a good chance that you can get some kind of a sell signal. As it stands right now, the QQQ, the E-mini NASDAQ 100 continuous contract is flashing very close to a sell signal. This is one of those cases where if it drops under 18,000, it'll immediately go from a sell signal upgraded to a sell mode. Hasn't done that yet. But the QQQ is the cash. That's really the instrument that we're basing it on. So at this particular point, that's the one that we have to watch closely. Let's go to the IWM, and that had already flipped to a short-term sell signal based on this at 10:15 this morning. It's at 10:13 a.m., but that's maybe not the case at 4 p.m. We have to wait for the whole day. But this is much, much weaker. 210.41 was the recent high. 244.46 was the all-time high. This is really lagging. Will this become a leader in maybe 3 weeks' time if the general market pulls back? And what about the SMHs? Look at this. SMH is down 4.19 at 214.07. It made a 239.14 high on the 8th of March. That's an all-time high. Was a peak E in the weekly. It's a leg C, so it's still early in the game. In the monthly, it should still go to higher highs in 2024. That is this year. That's not the price. And here it is. That 9-period moving average still hasn't even close to turning green. Let me just show you here on this larger. This is an easier picture to see. So the SMHs right there. Look, that green, well, you can see it better here. That green is still above the black. So, but I should mention we are short. So we'll be back. The Dow's up 73. Oh, talk about bifurcated market. Dow's up 73. S&P's down 10. I'll be right back. Basil Chapman, Tiger Technicians Hour. And when we get back, we want to talk about Paul.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Attention all opening call subscribers. Next Tuesday, March 19th, Basil Chapman will be hosting a live 90-minute webinar for all subscribers. From 4 to 5:30 p.m., Basil will take subscribers through an educative journey, giving insight into how he will approach this volatile market. Basil Chapman's opening call newsletter has a 30-day money-back guarantee for all first-time subscribers, and all subscribers get access to his trove of webinar archives, so you have nothing to lose. Go to the newsletters tab of TFNN.com and sign up today. We'll see you March 19th. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So in my webinar tonight, and I hope that I can do a little bit of live, it won't be trading, but live analysis, so that the E-mini or the whatever is functioning between 4 o'clock and 5, I will interrupt the set program that I have to show live. Look here, look at the 200-period moving average, how it became resistance right here. Look at this peak F at this moment, and what's happened to the 1-minute chart of the E-mini is just come down and it's testing the 200-period moving average. Repellent, this is support. Will it become a repellent? We'll know soon enough. You use the technicals, and that tells you there's a sell mode in place in the 1-minute chart. And we'll see where that goes. Made a peak D. Remember, peak D is where other things can happen. Here's your peak D at 5 o'clock this morning, just after 5, and the 10-minute chart comes down. So these are all things we'll be discussing, just exactly what's relevant to both positions that we have. For instance, we got 2 new positions yesterday. Both of them are above the prices that we got them at, both in areas that are kind of under the radar right now. It's what I want. That's good. And within that context, there was a question earlier on. Was it Jeff? No, I think it was Zenbit in the Tiger YouTube. I want to know about, what was it? I've got some SMCI. So have a look at this. So I've been talking about this for it's getting boring. I don't like things when it gets boring. But boring is really where things are most interesting, because that's where you have to focus. And I'm talking about round numbers. Well, SMCI, super micro company, sells server solutions, architecture, high power AI. I don't know what they always put an abbreviation, thinking that, I know exactly what I'm abbreviating. And then I come back and I say computing, of course, AI computing. Look, monthly chart leg E, a huge move down from the high in the 1200s to where we are right now at 867. Remember, I was talking about Bitcoin. I haven't even looked at it. I'm going to go to it in a moment. Someone just reminded me. Bitcoin. Let me write that down. Bitcoin. Remember, I said I'm getting topping action. Let's see where that goes. So here's your peak D in the weekly chart of SMCI. Here's your peak D in the daily chart. There's your first D, and it comes down sharply. It rallies a whole bunch of round numbers. I put them in gray because there are just so many. Even yesterday, there was a 1107 high. But look, on the exact all-time high, it goes to 1229.00. And it has a high. That's an all-time high. It hasn't gone back there at all. It made the dreaded H pattern right there. I'll be talking about that tonight, those H patterns. And it fails, and it comes down sharply. And it had a 12.00 open on that very day that it made the high. It's trading right now at 863.95. Oh, 864.00. No, that'll change. At 12.29 to 8.64, I wouldn't be touching this. So please, then, if you're doing anything with this, look at the short side. I wouldn't be looking at the long side. Maybe that's what you did. I'm not sure what you did. Grabbed some SMCI shares this morning that I sold at 1,219. Whoa, great. Almost 10 points off the high. That's fantastic. 7 sessions ago, perhaps just a quick trade for now, but we'll see. Any thoughts? Yep, my thoughts is, I'd be careful. Yeah, you know, I don't know where you got them at exactly, but they're trading. I think it's trading almost at the low right now. The low is 863.00, round number. The high is 925.00, round number. I have to tell you, I don't think I've ever seen it quite so bad. I do remember in the year 2000 that I noticed the round numbers. I just don't remember anything like this because, no, I just don't remember seeing anything quite like it. The number, it might have been, I just didn't see it. Here I am seeing it. So if you're looking for a trade, have the tightest stop, because if it takes out the round number low, it's trading at 870.00 right now, and 863 was the low. Then you if you got just about the low, then you've got yourself a trade. I'm not going to tell you what to do. My thoughts are this is coming down, and it's going to come down. My thinking here is that the 850 to 780 area is kind of what I would expect, but the speed that it's going to now, is there an offering or something? I think there might be. They're selling more shares. Whoa, they're selling more shares. All right, that's a different thing, kettle of fish. Then I have to look at something else. So all I can say is that I think it's done in a week and a half or 2 weeks, let's say, what it would have normally taken something like 5 weeks, 4 weeks to do. So speed is of the essence. That means it could make a bottom at some point and then have a really decent bounce. I'm just saying it looks vulnerable to me. I don't think it's going to get to the 1229.00 high that it made back in early March for a long time. But that long time is weeks. I don't think years or months. I'm just saying for a while. Okay, that was that question. Next question was AMD was mentioned. AMD down. So this is almost like a Chapman wave Roman candle here. I've got it right here. Look right here. What to look for after a Chapman wave Roman candle. It's one of the things we're going to do. So whether you do anything else in my work, if you just use these candles as a guide on what to expect the following 2 sessions, even that's the learning experience that I'm hoping you get. All right, let's get back to our story here. And so advanced micro devices, now I looked at this, this is the one that didn't have all those round numbers. It has had some, but 227.30 was the all-time high, peak D in the daily, peak C. I could give this an alternate count. I see no reason why the peak C, that candle is a very vulnerable candle, right? That if you see it with red candles after that, in the weekly and the monthly chart. So this is a Roman. If it stopped right now, it would be a Chapman wave Roman candle. It's not going to stop right now. We've still got 2 weeks to go, something like that, for the end of March. So let's just look at the monthly candle and say leg D could be a peak D. All right. So let me just see. Was there any round number today? And no, advanced micro devices has not had that. I think this is more concerted buying. I think this is in the sweet spot. Yes, 227 to 178, 50 points, 20-something% move down. Whew. In just a week and a half, that's quite something. It's had to get 1 or 2 round numbers, but I don't see it that way it could turn out. Now, what I did was I drew in the rectangle for advanced mic AMD. It's down 12 at 178.47 a while ago. And I said, this is a box. This is a rectangle that if it breaks out of at some point when it digests, it should come back. And 184.92 was the high back in January. So, and it's below that right now. So there it is. It's back in this rectangle. So this rectangle is going to be the containment area. So even though we are short, I have to be very careful. I want you to add to the short positions in the SMHs, but maybe all the damage, a chunk of the damage has just been done. Dow's now up 102, S&P's down 9.5. What? Diversion. I'll be back. Basil Chapman, Tiger Conditions Hour. Ooh, good session today. Whoa.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of Basil's educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So NVIDIA is trading out 29 at 855. So that's a 3.3% decline. It had a 974.00 round number all-time high. at that's 974, and now it's at 854. That's 120 points off that. And it looks to me like all the round numbers, I would say I'd be looking at 800 as really the key for this. If it takes out 800 in the next week, that's a real problem. It could go sideways. This is really, NVIDIA graphic processor. They just have the chips that are really in demand. But, there is some competition. I don't know quite how it will affect them, but I'm looking at this and I'm just saying on a purely visual basis, the 9-period moving average is holding well above the 14. So it's holding quite nicely in terms of the sideways move, although it's making slightly lower lows and lower highs. It's what happens next. And all I can say is that if it starts to trade below 843, 843, I think then all the technicals will start to deteriorate. But if that 9-period moving average still holds well, that's telling you that there's buying coming in. So that's a little different. Disney was mentioned in Tiger YouTube. Or was it or in the Den? I can't remember right now. Yeah. So you see, I speak about the 200-period moving average, and I'll talk about that tonight, as being extremely, it's like a magnet. The longer it takes to get there, when you finally get there, it's like a magnet, and at some point, it'll try to push above it. But look at this. For the whole period, late October, from October to April, October 2021 to April of 2022, it was stuck on this 200-period moving average. Support resistance right now. Finally, it broke down, right? And that was up in the 137 area. Here it is, much lower down because it's a declining trend line. It's had long-term lower lows, so that makes it declining. And now it's starting to rally. And for the first time, every time it got close, it couldn't get, close is not good enough. It's got to get really close. And then it's like a magnet. Click, all of a sudden, the price goes towards that 200-period moving average. But then it gets stuck. And until it really starts to power nicely above it. So Disney's going to be on our list. I like Disney looking out. I think they've done a lot to correct the problems that they had. Look at that sideways bowl-shaped consolidation. I mean, Disney could be a $140 stock in 2024, but certain things have to happen before you can really make that as a statement. I'm just saying that that's a possibility, but as a statement, no. Yes, the 9-period moving average on the daily chart is very positive. But wait a minute. The weekly chart, which is what we will, sorry, the daily chart is very strong with a 9-period moving average not getting even close to the 14. But look at the expansion of the weekly chart, that 9-period moving average above the 14. So Disney, and the fact that today it's up 6 cents in a market, and this is helping I'd say it's helping overall because you do want to have some stocks that are kind of independent of the market. I like to see that. To me, that's good. That says put it on your list because the next tumble in, for whatever reason, in Disney, if we can get down to this, I'll put this as a rectangle right now in the daily chart right there. I'll just grab it and say, that's kind of my rectangle that I'm looking at. If it can get back in, I'll make it there. Oh, it's got a different color. Let me see if it shows up nicely on the Tiger YouTube. Yeah, so in fact, it's even better if I put this surrounding frame pink. There. Oh, now you can see it much better. There. So this is the area that I would expect nice consolidation. What if eventually it fills the gap? I don't know. Maybe the gap, it doesn't get filled between, it doesn't go to the 99 level. It just fills it into 104, 102, and it makes a higher high. That would be really bullish for Disney. But on a short-term basis, it's holding well. Are there signs of any overboughtness? Yeah, there are a couple of signs because it's gone sideways. It hasn't broken to a new recovery high, and you've got the 200-period moving average magnet of the day of the weekly chart, which is at 112.96. It's called 112, and here it is at 113.97. So that says maybe it doesn't dip for long. It just pulls back, and then it comes back to the 200-period moving average and then takes off to the upside. So these are possibilities. I want to discuss that tonight because I know for more conservative portfolios, in the sense that you're going for the older stocks, that stocks that are in the process of turning around. In other words, 203.02 was the high back in March of 2021, tumbles down below 80. And now it's up at 113. That's a pretty decent, almost a 6% gain. So this is due for a little bit of a rest, but it's telling you that there's a chance that it's turned the corner, so that the ellipse, the quarro, that is the quarter panel of a semicircle, on this side is going to be the right side, like a boat. And this is the right side of the arc, or the inverse arc ellipse. Okay, so Walt Disney. I just wanted to spend a moment on that to say, this is just not a phase where you say, oh my God, throw everything out. No, I think this is very selective. That's the reason why we've taken some long positions, new long positions. And fortunately, wasn't really the case. It's just that that's what was available that I wanted in that particular area. There are single digits. So it just gives you don't have to put as much money to work to be successful. And if it's successful, you want to add to it. If it can, these can get into the teens, that's a different cup of tea altogether. You've got a whole new set of investors in the financial institutions. Certainly fund managers, when they get these particular stocks, if they get into the teens, they'll have a new life. So that's the way I want to look at it. Meantime, back at the ranch, we're looking at, I said I'll get to the TLT. Look, bonds. The weekly chart, and I've still got all the way to Friday at 4 o'clock, has just gone S. That means that it's turned negative, but you've got the whole week. It could go back to L, which is, there's the last, there's the 9-period moving average. L is for long, S is for sell or short. But that's just on the one indicator. I'm not saying to do that. I'm saying if you just use that indicator, you'd be following it that way. But look what's happened here. It's gone in the daily chart in this arch formation, like we call the dreaded H, because it looks like, no, I'm not going to do that. A dreaded H is where you come down sharply, try to have a rally, and then fail, and retest the left side low. That's 92.01. That's the thing. Will it hit 92 this week or not? What does the Fed say? What can the Fed say? I think the Fed's kind of stuff more. It's going to be premature. What do they say that's going to be? Up back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so we were speaking about Disney, and the middle chart was the weekly chart. Now speaking about the 200-period exponential moving average. Look at this. This is the E-mini, this is the June futures, and the 1-minute chart looks like it wants to make a leg D. 9-period moving average crossed positive. It pushed away from the 200-period moving average. The 5 minutes, so just think of this as the daily, weekly, monthly, but it's 1 minute, 5 minute, 10 minute. The 5 minute went right to the 200-period moving average, got reversed. Now it's got this little W-shaped formation. And as they're making the W, look, the MACD went negative and it went back to positive. Stochastic is kind of negative because it pulled back. There's the red and black line here, right? So red and green line. The on-bounce volume is running very nicely, and it's got to the 200-period moving average. And where's it about to stall, maybe? Right here at the 200-period moving average to the 5 minute of the 10-minute chart. So think of it as daily, weekly, monthly, 1 minute, 5 minute, 10 minute. There you are. You got your what's the objective in the Chapman methodology. If you can get a buy signal upgraded to a buy mode, and the stochastic gets over the 80% level, you should go to a D, and there it is. There's your D. And this is still only a C in the 5 minute chart, but the stochastic is still lagging terribly, and a B in the 10 minute chart. So that's the way I like to look at things. You look at it as handing over the baton from the shorter term to the next, to the intermediate term, to the long term. It's just the best way to think of it. Have each one independent, and as it overlaps, then it affects and effects the next time frame. All right, so TLT, this is what we're looking at, that it's stalled. It's at the lower end of the rung, but the lower end of the rung is back right here. This is the Lehman iShares 20-year Treasury Bond Fund. 82.42 was the low. 82.42. Forgot to put the date. I think it was in October. Yeah, 82.42 back in October of last year. 42, and it spiked all the way over 100. That's good. Now it's come back. It's just kind of sideways, but it is making lower lows and lower highs in the weekly chart. And the monthly chart still looks terrible. I mean, when you think of it, it looks like a stock. It looks like those stocks that we were looking at that had huge declines, like Shopify, etc., from back in 2021 to the lows. This is 179.70 March. Oh, exactly 4 years ago, March 2020. 179, and today it's at 92.80. So we had a 30-year bull market in bonds. I don't see why you can't expect. It's 4 years now exactly today, right? So that's 20 to 21, 21 to 22, 22 to 23, and 23 to 24. It's 4 years going on for the 5th year. I don't see why you can't expect and anticipate that after 30 years, some kind of a breather takes place in yields, and that's kind of what we're looking at right now. Certainly, if you're looking at the TBT, where did I type that wrong place? I'll type TBT. I typed there. Let's do it here. TBT. Look at this, TBT. That is the yields themselves. This is the exact opposite. So the yields go from the 45 area down to the 29, bounces up to 34, 44. And here's the same thing. You had a huge move down. This is a weekly chart. Now you're having a bit of a breather to the upside. So when you put the package together, what the Fed does, I'm not sure that it needs to change the trend all that much, because the trend is in place already. Markets get used to whatever it is. So the market will get used to the slightly higher rates. And look at this, Toll Brothers. Toll Brothers is down today 58 cents. But look where it is. It's had a spectacular run. It's had 5 sessions, 1, 2, 5. 5 sessions ago, it made an all-time high in the 124s. Right? Toll Brothers, all-time high, with yields high and everything. So remember, markets tend to adapt when they get used to whatever it is. It takes a little bit of a shake-up, and then they just adapt. So what I'm looking at here is selling from overbought levels. I don't see anything. I talk about the dark news cloud cover. I'll just deal with that very briefly tonight, because there's really not much that I can do until we get more evidence. So that just said, since February, I've been talking about yields have gone up. Crude oil prices have gone up. The dollar has kind of gone up, but nothing spectacular, out of the ordinary. So it made it kind of like a gray, sideways, dark news index. In other words, the news that would normally affect it, like it did over there every time the news was bad, boy, the market came down. Look at that. But now look at that green line. That green hasn't changed to pink yet. So I need to see a confirmation that there's going to be a pink turn down, and then you'll take out the 38,000 level, which is kind of the key support level. So until I get evidence to say that there is enough news out there that could become negative news that really impacts the market, I'm looking at this more as an overbought condition that's being resolved by some selling. Okay, so within that context, handling the baton, your thoughts on the longer-term PRQR. PRQR. My thoughts on handing the baton. I always do that. Forget to change there you are. PRQR. Longer term. So when you look at whatever PRQR is pro-QR therapeutics, I think. Look, held the 200-period moving average. This is the low that you have to use right there. So that's your peak A. That's your peak B. That's your peak C. Then it pulls back. Does not take that out. So that becomes, you've got to count every peak. Even that's an A right there. That's an A right there. All of a sudden, it takes out that C, and that becomes a D. All right, just on a short term, it's gotten to the D, and now it's pulling back a little bit. This is PRQR trading at 252, up 5 cents. So longer term, if it's biotech, Dan, you do the fundamental work that's really needed to put these together. When I look at this chart like this, I say, that looks like a biotech. Why? Because it has these long spindly spikes, little shadows or the wicks, and then it pulls back, and then it comes back in, and it does it over and over and over. So in this particular instance, I would not be looking out further than if there's a break of 270 and it can get to 275, and really it needs speed, because the way this works is when it's in up mode, speed is of the essence. Otherwise, it just goes sideways to down. So it needs speed. So, and this has also got that long wick, and says if PRQR can trade for about 4, I'm going to make it a whole 3 or 4 hours above 2.30. What, 2.30? What am I talking about here? 2.76. I was looking at the wrong thing. 2.76. There's a real good chance it's going to make its way to that 270 high. Once it does that, on a closing basis, on a weekly basis, it's got to be a big green candle. It can't be a spindly, long-legged one. Otherwise, you have to start all over again. So, yes, I agree with you, because the way it's kind of this horrible candle here, I think it's resolving that by moving higher and saying, whatever happened there, you're in a different time, different frame right now. So it has to get to the 330s to go much higher. I'll be back in a minute. Dow's up 127.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, folks, so even today, we've got the Dow. I'm not sure, is it Home Depot? There are a couple of Dow stocks that are doing really well, so the market's responding very nicely. And that's the reason why I'm saying the daily charts are saying to me that this is what you can expect, some kind of a shorter term pullback. But I am concerned that once the selling starts, it could start to increase quite quickly. So that's why whatever the Fed does tomorrow, it's the market's response that is most important. And I'm also looking at this crude oil. This is very steady. It's like, look at the weekly chart. Just a week or so, a week or 2 or 3, and then it goes to a new high. A week or 2 or 3, and boom, a new high. So I'm watching that closely, because if crude oil trading at 82 actually gets to the 84 area, I think it could be a problem for the market. So I'm going to be discussing all different areas and stocks, different prices, what we're looking at, why we're looking at them, what we want to get into, what are potential shorts. People also like to look at short side. We'll look at that. I'll be talking about how inflation might still be here, because the DB Agricultural Fund is at a new all-time high. Well, all-time high for what I'm looking at here, and we are long this still. And it's at 23.61. It's just gone straight up in leg D above the resistance. So I can see that inflation is out there. and let's see what the Fed does with that. So in the meantime, I'm going to wrap it up and say, oh, no, I'm wrapping it up too soon, huh? All right, don't wrap it up. I don't really want to wrap it up. It's kind of fun to be able to look at all these things in a different way now that I've done the work for the webinar. Yeah, so the VIX index is down 28 cents at 14.05. Look at this Chapman Wave Insight Track support level. It keeps making higher lows, not necessarily higher highs, but higher lows. So are fund managers beginning to put a little money to work in the VIX index to be able to buy some insurance? We'll see by tomorrow afternoon, by 4 o'clock's close. And this afternoon, check out the front page of TFNN for my webinar coming up. Should be very exciting, and hopefully